This goes back to your possible doom and gloom scenario about the U.S. Economy, and I guess I'm not convinced that there's the political will, to do anything about it. What time frame are we talking about?
And that's a great question. And the whole problem, and you can see this, what's happening in Europe. At what point does it become an issue? And there's no real answer, though. Through a book that we talked about last year, This Time It's Different by Reinhardt and Rogoff, they give you some idea of when a country's debt to GDP gets to a certain level, what can happen. But really, it's market sentiment that really will dictate when the bond market decides they're going to not accept those interest rates and demand higher interest rates, or they don't want their bonds. For a country like the United States, being the reserve currency of the world, it's a higher threshold. One of the things I would worry about, when you look at Brazil, for instance, Brazil has much lower debt per capita or per GDP than the United States, but they will get less latitude from the capital markets than the United States will. I mean, look at Japan. I mean, yes, most of their debt is owned internally and held by their own people, but Japan has, multiple of their GDP in debt, and their interest rates are almost at zero. So, at what point does that change? So,
okay, I'm 60 years old, and I'm just wondering, okay, is that something that me as a Canadian is going to have to worry about? At what age would I have to start worrying about that, or is it, or is that going to be my daughter or granddaughter's problem, not mine?
I suspect the latter, but I think the concern would be what John was talking about with Europe, is it really does, it is that canary in the coal mine, and it makes people more aware of that, and I think what will really happen is that once you see the start of it, there will be the political will to get it done. And I actually think there is a chance that with this administration and what's happening in Washington, there is a lot of talk about cutting the entitlement spending. And as much as I showed that doomsday thing, I think the actual opposite, really could happen, is that they tackle it, and I think that's extremely positive for the U.S. dollar. And alternatively, then would be potentially negative for precious metals.
Yeah, and and that's sort of my viewpoint, because one of the issues we talked about this last year. The U.S. Clearly has the poster boy issues, the poster boy problems, because that's what the media focuses on, and I get that. But in reality, for example, if you take a look at the average strong European country, they're consuming 40 to 50% of their national income and government services, and to fund deficit issues and interest on their debt and all the rest of that. In the U.S., the total government take for all governments is only 28%. If the U.S. put on an 8 or 9% VAT tomorrow, which would be a fraction of what it is in any European country, they wouldn't have a deficit at all. So the issue is not, do they have the resources to resolve the issues? They absolutely have the resources to resolve the issues. This is a political issue as much as anything. And granted, you've got the Tea Party and you'd have a lot of gnashing of teeth and all of the other things. But at the end of it, and interestingly, the Japanese are in the same boat. The Japanese also have one of the lowest taxation rates in the world. Roughly also around 28 or 29% of GDP. There are answers to the questions that come up that countries can decide. I think what both Rob and I feel is that the political will only exist when the markets say, we're going to make you do this change. Take a look at Ireland's situation. Essentially, it's the markets forcing Irish interest rates to go to 9% when they can't afford 9%. That is making the government finally take what one would argue are the steps necessary to make this a manageable solution. And in their case, they're going to have to either default in part of that debt, or they're going to cut the interest rate in some way, shape, or form. This could be a very interesting anomaly from an American perspective, because you could find yourself easily in the situation where you were perfectly willing to lend money to a company that was U.S.-based because they have the resources to pay off the debt and they're financially solvent, but you wouldn't lend the money to, say, California, which theoretically is supposedly got an ability to tax. So it's like anything else again, it does depend on the asset you buy. Just because the U.S. itself has a series of issues and debt problems from a government perspective does not mean owning U.S. assets doesn't make sense. And so that's part of the distinction between the planning. So I would think, quite frankly, that we're going to hit this crisis, certainly, given your age, well in your retirement years. I doubt very much if we can go another 10 years without some form of this crisis reconciling itself one way or another. If we're lucky, calmer heads actually develop solutions which make sense. If we're not, we're going to have a crisis that looks like, the 18 or 24% interest rates we saw in the late 70s and early 80s, which would be a real disaster. But let's face it, many of us are old enough here to remember surviving that, and we're still here, right? So I'm hoping, obviously, for the former scenario and not the latter.